on, Swiggy has filed an updated DRHP for its 10,700 crore IPO. The valuation, though, has topped 83,700 crore of the food delivery company. Now, how does that fare against its listed peer Zomato? Agam brings us a detailed report.
One IPO that a lot of investors are waiting for. Now, in terms of the latest deals that have happened, and this is, of course, the pre-IPO deals that we're talking about, that's happened somewhere in the range of around 330 to 375 rupees per share. What does that peg Swiggy at in terms of its valuations? Well, a little less than $10 billion, or for that matter, a little less than 84,000 crores, or 83,000 crores to be precise, at 375 rupees per share. But moving in, as far as your IPO is concerned, they're expected to raise about 10,700 crores, and this will be split between a fresh issue, which will be worth around 3,750 crores, and a little less than 7,000 crores will be an OFS. This is as far as its own valuations are concerned, but how does that compare to Zomato, which is in the listed space? So firstly, we must realize that Zomato will have a listing premium and Swiggy will have an unlisted discount. Still, if you consider 85,000 crores as the valuation for Swiggy, and if you consider the sales for the year gone by, that comes in at around 11,000 odd crores for Swiggy. Well, the price to sales ratio stands at around 7.6 times. In comparison, Zomato's market capitalization is well over 2.5 lakh crores, and it's in terms of its annual sales, it's not too far away from Swiggy. It's about a little over 12,000 crores. Which actually pegs its price to sales at 20.6 times. So as you can see, in terms of price to sales, the ratios, in this case, there is a very wide gulf between that and Swiggy and Zomato. And as I continue to mention, besides the fact that we are looking at that listed premium for Zomato, we must remember that Swiggy is looking at a deep discount also because of the fact that it still needs to be profitable. It is on the path to profitability. On the other hand, Zomato has starting to turn profits on a little bit more consistent basis. And well, we must remember, of course, that Zomato is also listed, which is why you get that listing premium. But what does the management have to say when it comes to Swiggy in terms of its outlook going forward? So when it comes to the food delivery business, well, on a year-on-year basis, going in, Swiggy is expecting about 18 to 20% growth, and this growth will largely be driven essentially by addition in new users. And as far as this grocery delivery business is concerned, that's where we are looking at a staggering growth of around 60%. But of course, this is where they're also working on a relatively lower base, which is why this number will look a lot higher. The question then is, in terms of a pre-IPO allotment, and if you're one of those investors who have in fact managed to get their hands on the Swiggy shares before its IPO, what are the risks that you are keeping an eye on? A listing delay, because so far we only know that the DRHP has been filed, but as is the case for many IPOs out there, you never know, this could be a possibility, which means that you may have to wait for a little longer than what you may have anticipated. A downturn in listed market valuations. Now, just let's say suppose tomorrow, if you do in fact see a sharp correction in Indian markets, in Indian equity markets as a whole, you may in fact see a correction in the valuations at which the Swiggy IPO may come. And of course, let's not forget, if you are an investor in Swiggy pre-IPO, there will be a lock-in of around 6 months. That means you will not be able to sell shares when Swiggy in fact lists, but 6 months post that. So those are just some of the factors that you need to keep in mind when it comes to Swiggy and its upcoming IPO that stands to hit the exchanges over the course of the next few months.